Hello everyone, how's it going? In this video, we will talk about Palantir, trading under the ticker symbol PLTR. The financial market has been going through very volatile swings recently, and one of the most talked about and sought after stock has been Palantir. The digital eyes that may not directly see what's around it, but can identify trends, patterns, and causalities from the information that is fed to its platforms. People have been very hopeful with what it may be able to deliver, not just to investors, but to the economy overall. Data is one of the most precious and least understood resources that corporations have, and what Palantir wishes to accomplish is to make use of the digital footprint left behind by users and stakeholders in order to help companies to make better decisions, to optimize the company's operations and to increase their bottom line. Palantir is also known to be very well introduced in the public sector, with some of their biggest clients being government departments in healthcare, defense, and law enforcement. The reason why this makes Palantir unique is because those contracts tend to be long-term, with guaranteed cash flows, and are testaments of deeper relationships that may enhance in time. With that being said, the very nature of the company's business model has put Palantir in the tech sector and marketed as a growth stock that will use its resources to grow and to give investors exponential returns in the years to come. This is typically something that investment in tech startups would promise, and they have also delivered on some of their promises. For one, the revenue of Palantir did grow over time, and they have diversified their activities in the private sector and have upgraded their software platforms as well. There have, however, also been a couple setbacks. Despite the fact that Palantir has been operating for many years before it went public, its operations are not profitable. The cost of doing the business is higher than the benefit, and this has been one of the bigger hurdles preventing its shares from reaching higher places. Now, we're going to talk about the financials in a moment, but let's just say that regarding the operations not being profitable, there are some huge nuances to be had. By that I mean the overall financial situation is that they're having a net loss. It doesn't mean that they're having a gross loss. So Palantir also has an overexposure to the public sector, which makes it vulnerable to spending cuts when times are tough. This may have a negative impact on the company's profitability as well as its market cap. The third hurdle is its own reputation. Palantir deals with data, which may cause privacy concerns regarding how they were obtained in the first place and whether they are allowed to be used. In fact, the company's mixed reputation has been concerning, at least in conference calls, with its CEO, Alex Karp, stating that many of its clients actually dislike the company, but they don't have a choice but to deal with them. These statements are alarming, in my opinion, if not more, and efforts to improve the brand image should be implemented in the near future. The final issue that Palantir is having right now is the unfavorable market condition or trend. Simply put, Palantir, just like any other growth stocks, requires a favorable investment environment in which investors are optimistic about the future and therefore are willing to invest into the future of the companies like Palantir. With the looming recession, raising interest rates, quantitative tightening of money and especially of US dollars, as well as the conflicts around the world increasing the cost of basic goods like food and energy, investors no longer have the confidence in the future, and they prefer to put money into safer investment options like savings account, bonds, and blue chips. Suffice to say that Palantir has been having a lot of downward pressure lately, and that these issues will take time before being fully resolved, and in the meantime the gravitational pull would be downward. So over the past 5 days, Palantir has been bottoming near the $7 level and recovered somewhat up to $7.40, currently back to around $7.30. This might be just a mechanical reaction from the previous sell-off, since over the past month, Palantir went down by 15%. It doesn't really mean that Palantir will necessarily start to take off from there, but simply to take a pause before the market participants, make up their mind about where to head next. Now, can Palantir dip even lower? That's possible, theoretically. But with the historical low not that far from where it is now, the market would require some significant events to continue moving downward. Like, for example, if some major data usage related scandal broke off, and if Palantir reacted poorly, things could go south very quickly. Otherwise, I think that even for those who don't believe in Palantir, they may no longer have any sort of willingness to keep dumping shares at that level. They might also anticipate that things are not going to be that low forever. So it would be better if they just wait a bit, wait for some kind of recoveries, and then to continue dumping if that's what they wish. For those who believe in the long-term potentials of Palantir, I believe that they will probably use this price point to enter in the company. If we look at the long-term price action of Palantir, we must, determine whether this company will have a place in the economy of perhaps maybe not tomorrow, but the day after tomorrow. We already know that Palantir will not be profitable for another few years. That much is already priced in. We know that Palantir is in a highly sophisticated area, which is very, intensive in relationship, capital, and also talent. And that it aims to become an analytic dashboard for wealthy entities, for deep pockets, both from private and public sector. The true debate is whether Palantir itself can stand the test of time, whether the market will believe that its potentials to become something much larger and critical for the world economy exists. Palantir fell by almost 80% from the peak of the share price, from $35 down to $7.28. Much of it is due to the overall market trend, and the rest is caused by doubts on the company's growth potentials, as well as its business model to work with government agencies. Personally, I believe that Palantir has been testing its bottom for some time now, as the downward slope stopped its progression for more than 6 months, ever since the price reached around $8 back in May. The rest of the downside slide is probably caused by the habit of going lower by default. Does this mean that the stock will reach new highs soon? I don't think so. On the other hand, I do believe that Palantir will have a place in the future, and that its price is due for some significant change in the future. Given that it's been down by so much, the only logical scenario is a price recovery once the storm is behind us, which hasn't happened, just yet. As we look at Palantir's financials, the first thing that is noticeable is the positive gross margin. Above all else, this is a decent reminder that a company's core business seems to work. It is true that the revenue has been growing slowly over the past quarters, which, sparkled some worries from investors, but the fact that the gross profit is positive suggests that the main issue now is the scalability and diversification of its operations and clients, which can solve the problem once they reach a critical number of clients. Also, we should remember that Palantir's revenue managed to grow despite the fact that there is a de facto recession in many economies around the world, which suggests that Palantir's clients are relatively robust, which is a good thing for the company. The cash flow reports suggest that, despite having a net loss due to the fixed costs, Palantir can self-finance a significant portion of its operations with positive free cash flows at the end of each quarter, ever since Q1 of 2021. This would mean that the pressure of Palantir to go through rounds of share dilutions would be relatively low, which is a good thing for the shareholders. Another significant aspect to consider would be the liabilities that Palantir has on its books. Currently, there are $933 million outstanding, which remain mostly constant over time and slightly decreasing even compared to the previous quarters. This is also very reassuring, as it suggests that Palantir is keen on having a low leverage, which decreases the solvency risk. There's also around 34% of institutional ownership amongst Palantir's shareholders, and what this means is that Palantir does have a significant endorsement from money managers, but they are largely outnumbered by retail shareholders, and that there will be a significant chunk of people going in and out of the stock based on the market movements and the short-term price actions. This would suggest that Palantir is good for, investment, but we should also be aware of people who still hope to profit off the swings, and don't blink when small volatilities occur. Currently, there are 4.2 million shares shorted against Palantir. Some may believe that there might be potentials for a short squeeze because those 4.2 million shares will need to be redeemed at some point. And right now, it takes about 4 days to recover. With that being said, I believe that Palantir currently has a certain volume of short positions against it because people are genuinely convinced that Palantir will have to go through some serious headwind against it. I don't believe that they will form the basis of a short squeeze, or at least not as a primary motive. Overall, I believe that Palantir will be able to make its mark in the future, and that it is a stock that is better to invest rather than to trade. In the meantime, it should be treated with anticipation that the short-term price movements should not be able to influence the decision-making. So for now, I would say that continue a dollar averaging strategy seems to be the best option. The recommended exposure would be between 3 to 5% of your portfolio.